So welcome everyone to today's webinar entitled Out of Carbon and Into Positive Investments. I'm Tim Hunt, co-editor of Epical Consumer magazine, and I'll be hosting today alongside producer Rachel from Essex, who's worked tirelessly in the background to make things happen. You won't hear her, but she's doing all the technical things so that everything works smoothly, we hope. So I'll be joined by Danny Pafford from the UK divestment campaign 350.org, by a colleague of mine, Rob Harrison, a director and editor at Epical Consumer, by Sharon Graves, senior product manager at Tradeoffs Bank, and Lisa Ashford, CEO of Essex, an online positive savings and investment platform. So on the agenda today, we've got an update on the global divestment campaign, some tools available for consumers around that campaign, some information about financial products, positive financial products, a couple of case studies, and then we'll go on to a Q&A at the end. So we do ask that attendees please submit their questions by the Q&A box at the bottom right-hand corner of the WebEx platform that you're logged into. So we're going to kick off now with a bit about the global divestment campaign. This week, as many of you will know, it is Global Divestment Week. Danny, are you there to tell us a bit more about what's happening this week?
Yeah, sure. Hi everyone. Thanks for having me. Yes, so the global divestment mobilization is happening right now, and there are kind of hundreds of events taking place across 6 continents, all kind of focused on divestment and kind of undermining the social and political power of the fossil fuel industry. We've got events from Somalia to China, and yeah, the aim is really to kind of build momentum and show the power of the movement, and kind of help us connect as a global movement, because divestment is happening everywhere. Help stigmatize the industry and also launch these new campaigns around the world. And so this is the first mobilizations that have included, you know, Africa, Latin America, and you know, their campaigns are really building. In the UK, there's been faith events, there's been local government events. Yesterday, it was announced that 50 MPs have just signed the pledge to divest Parliament, which is very exciting. Tomorrow it's Barclays AGM, and they're going to get hammered about their investments in fracking. And there are about 45 events going on this week that we know of, so that's really exciting. Yeah, so that's global divestment.
Where can people go to find out a little bit more on that when the webinar is over? What's the web address?
Good question. So if you go to globaldivestmentmobilization.org, you can get all the information there, including live coverage of all the events that are happening throughout the week.
That's fantastic. And how did this movement come about, Danny? If you could give us a bit of background, please.
So the fossil fuel divestment movement started at university campuses in the US and has since spread all over the world, and is now global and targets loads of institutions from, you know, universities, local government, faith institutions, all sorts. And it was born from a kind of reflection that, you know, we've been working on climate change for years, and yet, you know, what is it? Why is climate change policy not happening? Why aren't we getting anywhere? And it was about looking at the power dynamics in that situation and being like, okay, we know that preventing climate change means leaving the vast majority of fossil fuel reserves in the ground. And that's an existential threat to the wealthiest, the most powerful industry that the world has ever seen. And so if you look at why we're not making progress, it's because climate progress is being blocked by a very, very powerful fossil fuel lobby who stand to lose an awful lot if we take action. So the fossil fuel divestment movement was really born out of being like, we need to challenge the political power of the fossil fuel industry. How are we going to do that? Divestment is a really powerful way to do that. We know that divestment campaigns have worked before, from looking at apartheid South Africa to the tobacco divestment campaigns, and divestment felt like a really powerful action that institutions around the world could take and really show climate leadership at a local level. If anyone, the movement was kind of launched with this seminal piece in Rolling Stone magazine by Bill McKibben called Global Warming, the Terrifying New Math. So I really do recommend that as a kind of piece of reading for anyone who hasn't read it yet.
That's great, and it's quite a young movement. But what do you think's been the biggest achievement of that movement so far?
Yeah, it's really young actually. It's only it's launched in 2012, and it's now the fastest growing divestment movement the world has ever seen, which is really exciting. And so far, 700 institutions with a kind of asset base of about $5 trillion have committed to divest, which is enormous, and is so much bigger than anyone kind of imagined at the start. So it's really exciting to watch it kind of really take off. And I think we measure our success both in the number of institutions that I divested, but also in terms of the impact that's having. And the financial discourse around investing in fossil fuels is changing, and the narrative around keeping 80% of fossil fuels has become much more mainstream. And I think kind of most importantly from us, in terms of damaging the fossil fuel industry's reputation, is that we know that the fossil fuel industry is struggling to recruit millennials because young people no longer want to work for this toxic industry. And for us, that's a huge success. And part of the divestment campaign is about trusted institutions, including universities and faith groups, speaking out and saying, we no longer want to have anything to do with this amoral industry. So yeah, it's been really amazing to be part of.
And what are your oh, okay, that's the toxic air causing that, obviously. What are the priorities for you now for the movement moving forward, do you think? And what do you think success would look like from 350 goals?
Yeah. So obviously, right now we're super focused on the global divestment mobilization and kind of supporting the thousands of people around the world who are taking part, and really amplifying that message and make sure that is seen and heard everywhere. I think obviously ultimately our aim is to delegitimize the fossil fuel industry to the extent that that it breaks their political power. And I think, what that means for us is that, the UK still gives enormous subsidies to the fossil fuel industry, kind of the biggest of any kind of G7 country or G20 country, in fact. And, we shouldn't, we need to stop subsidies to the fossil fuel industry, basically, and we need to make sure that, the fossil fuel industry cannot be present in those political decisions. So breaking their political power, and ultimately providing a space where legislation that kind of keeps fossil fuels in the ground and facilitates a just transition to a renewable economy is kind of ultimately where we're pointed. And I think the role of the divestment movement, where we're looking, is just to continue to build that power and looking at more and more institutions across a wider range of fields who are kind of standing up and saying, no, we want nothing to do with this toxic industry. So yeah, I think for us, it's more of the same. It's more people, it's more institutions, and kind of really building that message.
Yeah. So I guess question for Rob. To date, it has the divestment campaign has sort of focused on institutions such as universities. Why is it that Ethical Consumer picked up one of the many groups that picked this up as a campaign, and why is it important for consumers to get involved?
Yeah, I guess, we saw a bit of a gap there in there's fantastic work going on about, around the local authorities or some of the big funds that are invested. But if you look at your own bank accounts or your own, investments or savings, it's still, very common to find fossil fuel stocks in there somewhere or lending in there somewhere. And so, on the basis that, institutions move when people at the bottom push as well, it's about consumers adding to the aggregate pressure of change. But I think, we began it last year, and there was a bit of a feeling after Paris that people campaigning around Paris felt quite deflated and wanted just something to do, and wanted to get involved, and realised that they'd kind of gone as far as they could in that direction. So now it's it's a more direct form of action than arguing for regulatory change. And so yeah, we realised that there was a lot of opportunity to kind of broaden the whole divestment discussion out to individuals and what they can do, and in a sense, as we'll see today, I hope, it's about how you can. It's not just a matter of divesting from fossil. It's about investing in something else in its place, and that something else is renewable. So that's what we'll discover, I guess.
Let's hope so. So just to take a step back from that, I think, Lisa, now you're going to talk a little bit about the flow of money and the lack of transparency within the finance sector that's leading to banks, I guess, more easily being able to continue to invest in fossil fuels without perhaps as much consumer pressure as might otherwise be there.
Yeah, thank you. I mean, I think there's a couple of aspects to this, and it's relatively new thinking for people who aren't necessarily very close to this. But for those of us who are right in the middle of this sort of industry, it's quite obvious what's going on. But essentially, people they make conscious decisions with things like making purchases or making investments and spending their money, and then there's an unconscious state of mind as well. And people really have begun to feel much more passionately about divestment issues and not supporting carbon-intensive industries. So they're quite comfortable with the fact that they're not consciously supporting things like that. But what a number of people don't realise is that by doing nothing, they're still unconsciously supporting some of this stuff. So by doing nothing, you're inadvertently financing some of the things that you didn't want to. And that's kind of mind-blowing for people and myself as well when I've looked into my own personal finances. So I think you've got that realization of people, plus a real growing mistrust in the traditional finance sector after the financial crisis, because of a complete opaqueness of what happens to your money after it's left, your pocket and gone into your accounts, whether it be, a savings account, a current account, or, your pension or whatever. So, these things together are causing people to really start to understand that they need to take direct action, and that really they are or should be in control of their money and making positive choices about their money. So I think we're at a real interesting time, actually, where a number of factors are coming together to really stir things up and create change, and it's up to sort of all of us to help educate people about this, but also provide them with, what they can do, whether that's from a campaign perspective or getting better connection with their money or providing sort of alternatives that are appropriate to them. Yeah, does that help?
Yeah, I think so. So I guess it as well as it being about carbon divestment, it's always also very importantly about positive investment.
Yeah.
I mean, I don't know if you just want to talk to that for a minute.
Yeah, well, I mean, it's about what, as I said, what's really happening with your money. And, you know, you have a ethical finance movement that started way back when with the Quakers, actually, who suggested that money should not be going to finance bad things. And so this ethical movement sort of progressed to the point of, well, let's screen out all of the bad stuff, and then obviously you'll be left with all the good things. And that, I think, was adequate for a period of time to start to create an understanding about what your money does. But actually, there is a more discerning customer now within society who is suggesting that that's not good enough anymore, actually, and I want to make sure that my money is creating real positive impact. It's the same thing with the fair trade movement, etc. You know, people really are wanting to put their money into things where not doing harm is not good enough. It has to be a real positive impact. And so that's what positive investing is all about. You know, and we hear it talked about in a number of different ways. Sometimes it's called impact investing, sometimes it's called social investment. Essentially, it's doing the same thing. What it is doing is making sure that your money is going to create something which has a positive impact on the world. And that's something really powerful that everyone can get involved in and help to create more positive change.
And Rob, could you maybe now sort of introduce Ethical Consumers' divestment campaign, which I know is as much about the positive as it is about divestment?
Yeah, Rachel, would you be able to get all the slides up at this stage? And then I can talk to them.
Yep, I'm just pulling them up now.
Okay, so while they appear, so in July 2016, Ethical Consumer published its first big chunk of work on carbon. The whole report was called "Shaking the Carbon Out of Your Wallet," and it looked at across a range of all the financial services that ordinary consumers are likely to come across. And it started asking the question about where is the carbon and where are the good options. And so I probably, you know, my first three slides just kind of identify some of the problems that we were talking about before. And although the slide in front of you is actually unreadable at the size it is there, but it's a big piece of work carried out by pan-European green groups who looked very seriously across the whole banking sector to see the amounts of money that they were putting into fossil fuel projects, new power stations, all this kind of stuff. And all the UK high street banks are listed in the top 25 list in front of us there. I think it's Barclays are the fourth on the list. And the figures across on those lines go up to 80 billion, I think, over 4 years. So that it shows you the significance of investment that's still going into fossil fuels, or that was in the period up to 2013 when this research took place. And I think the very lowest one on the list there is Santander. So it's often, we know that the classic big four UK banks are often demonised about not knowing what they're doing, but some of the other alternatives are equally problematic. So this is a really detailed piece of research about the actual amounts of money. And we saw that taking your savings inside the bank and investing in coal mining projects was pretty universal, and it's only...
Hi Rob, sorry to interrupt. Can you just be a bit closer to the phone so the quality is a bit better?
No, that's fine. I find that, yeah, I hold the phone too close to my face, I'd switch it off by saying the fair phone has its issues. But anyway, in our guide we started just understanding the nature of the problems, and so we've seen that in a sense, carbon investment in carbon is still endemic across the banking sector. And I think if we go to the next slide now, we'll just show. This is the problem that exists in pensions as well. This is just a little article that was published, I think, in March this year. A news article, Scottish Council slammed for investing 1.7 billion into climate-risk pension funds. So it's about local government pension funds, and effectively there isn't carbon divested there. Still a lot of money being invested in oil and gas companies. So we know that there's a problem at the pension level, some of which is being addressed by org and campaigns like that. And then if we go to the next slide, this is the idea of ordinary investment is a problem as well. And I think one of the most common things that ordinary consumers will invest in are pooled funds, or open-ended investment companies they're called, or unit trusts. So this is a very common way that most consumers will be involved in investment, certainly if they're not super rich. And I think again in this sector we know that.
I think, Rob, I'm sorry to cut in. I'm having a lot of difficulty hearing you. I think perhaps some of the people in the webinar might be as well. I don't suppose maybe you could have a chat with Rachel and see about calling in on a different line. And I thought maybe we could hear from Sharon for a minute while we try and improve your line. Sharon, can you give us some more info on maybe speaking to your current savings, investments and pension providers in relation to ethical or positive investing? Are you there, Sharon?
Yeah, I am. Yeah, sure. So I think the key thing when talking to your current providers is ask the questions. Ask them what is their policy around carbon investment or divestment. What are they doing? What's their approach to investing in renewable energy sources? How are they going about that? What's their approach and consideration of climate change? How are they taking steps with their investments, portfolios, to invest in those sectors and move away from carbon? Lisa earlier talked about, AGM and Barclays AGM tomorrow. If you are a shareholder of these companies, go along to their AGMs or submit questions to them. Ask them the difficult questions. How are they changing in response to the issues that we're seeing and also to their customers' requirements? In terms of savings products, how are they being transparent? Where are they lending? How do they make their lending decisions? Who do you lend my money to? What types of organisations do you support and why? And I think there's some of the questions that we can all go to our current providers today and ask them, what are you actually doing and how are you changing what you're doing and what's your policy on these things?
That's great. Danny, can I bring you in there? I mean, I guess you've been doing this a little bit through your work with 350.org. When you talk to the big banks, what is it they're saying to you?
What are the big banks saying to us?
Yeah.
Well, we don't. We don't actually do much direct engagement with banks because we so far, the majority of the divestment work that we do is targeting kind of public institutions who have kind of a stronger moral voice that can speak out. And I think because the most important target for us is people like faith institutions or universities. However, as we're starting to move into bank campaigning and seeing that that's where there's leverage there, and as more and more kind of institutions divest, and we're looking for other places to go. I'd say we're still in the early days in strategy of developing that. I haven't had a direct conversation with a bank yet, but I think the divestment movement very much sees its role as kind of creating public pressure, and that the banks can't, they can't avoid. And I guess what we saw around the DAPL campaigning, that if you create the Dakota Access pipeline campaigning, if you create enough noise and enough investment for them, they will shift. So kind of that's our, that's our plan.
Yeah, and so bank switching is changing what they do is one thing. How easy is it for consumers to switch products? Sharon, maybe you could take that one.
Yeah, sure. I mean, it depends a lot on the product. Increasingly, regulators and the government are very much in support of making it easier for customers to switch, and they've been very proactive. Things like the current account switch service, provided by BACS and organisations and most of the banks signing up to things like that. So there's been a lot of industry pressure, come on the industry from regulators to make it easier for customers to switch. So current accounts, regular savings accounts, it's relatively simple for customers to switch these days. ISAs, again, the same. You complete a ISA application form at your new bank, or a switch form at the new bank you want to switch to, and they'll take care of the processing for you. So, and there's very strict service level agreements and timelines that all of those have to be conducted through. Now, when it comes to investments and pensions, obviously it becomes a little bit more difficult, and I think as a consumer, if you were looking to switch those, you need to be looking a little bit more carefully. Sometimes things may have to get sold, so funds or investment funds may get sold before they get switched over to another provider, which obviously can have impacts in terms of taxation impacts, or making a loss, or if you're selling at the wrong time. So you just have to be aware of what the product is that you've got, what, if any, restrictions there are, and if there's any exit charges or that are on any of the products that you have. But like I say, for savings and things, it's relatively easy these days.
And Rob, are you back online? Do we have Rob back?
Yeah, I'm on a different phone now. I don't know if this one's working any better.
That sounds a lot better, Rob. Welcome back. Sorry to cut you off before.
Yeah.
Maybe you could sort of join the conversation again at this point in terms of the ethical consumer campaign and some of those positive places where people can look to start to switch their sort of current and savings accounts.
Yeah. So Rachel, are you able to get the slides up again? Sorry, we're going. And maybe the one after that, we could start with that. So yeah, as I say, in June last year, we did a big report on all this, and essentially it contains lots of information about mortgages and investments and pensions and ISAs and a few other things that you hadn't thought about. And we do buyer's guides, and we rank the providers against ethical issues, and we give them a score out of 20, and the little card on the right-hand side of the screen shows the score of various providers I think it's current account there, with Tradeoffs' new current account sitting there at the top. So there are huge amounts of resources offering solutions now, and if we go to the next slide, so Ethical Consumer are the kind of place to go for information on banks and savings accounts, because there isn't really other folk working in that area so much. But in pensions, there are lots of people working in this area. There's this thing called the Asset Owners Disclosure Project, which we've just got a little table out from here, and you can see that, you know, the kind of Church of England pensions are going down a bit in 2017 from their regular annual test on how they think they're going against on climate stuff. And, you know, we've got Greater Manchester Pension Fund down by 17 down the bottom there. So you can kind of track some of your own funds, how they perform if you've got a big group pension in through resources like the Asset Owner Disclosure Project. If we go to the next screen, this is the group called Share Action, who produce this is the kind of front page of a kind of booklet that gives you all the information you need about how to phone up your own pension fund and engage them in discussion about carbon divestment. And you know, it kind of gives you forms, how to get a meeting. It's really fantastic kit. And then I think let's go to the next screen. Can't remember what's on it now. Oh yeah, and you know, these are all the other guys around here. Some of them in the room today, about, you know, where you can invest in other places. So there's a huge range of tools. We kind of list them all in the Ethical Consumer Research Report. And yeah, so that was probably what I was going to say at that point.
Okay, that's great. So if we come now perhaps to Sharon from Tradeoffs, perhaps you could give us a little bit of information on how you guys have positive impact and can generate a financial return for people as well.
Sure. Rachel, if you can just bring our slides up, please. Thank you. So I think there's one before that, Rachel. That's it, thank you. So this one really is just an overview, I guess, of what Tradeoffs is all about and how we operate, and underpins everything that we do, really. And this you can find on our website, which is Know Where Your Money Goes. And going back to what, you know, we said earlier about transparency, you know, this is our total transparency here of what we do. So everything that we lend to, all of the projects and the organisations that we lend to are here on our website, and customers can see where their savings are going, and which organisations, which community projects we are supporting. So moving on in terms of what products we offer, I focused here on personal products for individual and retail consumers. We offer a full range of personal savings products, including cash ISAs and a full range of cash ISAs there. We got savings accounts, majority of which are notice accounts with some online instant access savings accounts. And the charity saver is slightly different, and it's a save and donate. So a portion you can, for however much interest you earn, Tradeoffs will make a percentage donation to a charity that you choose of that percentage of your interest that you've earned. On top of that, you can also choose to contribute so much of your interest as well. That's the only account that we offer that is actually completely tied into a donation, if you like, to various charities. In terms of all the other savings accounts, it's really about where your money is going, and then what we're doing with that, and the projects, as I said earlier, that we're supporting through that. The the campaign photo here is just something from our recent ISA campaign, and this is a project that we supported through our customers saving with us. We also do a full range of investment products, which are on the next slide. And Tradeoffs Investment Management manage these. They're based in the Netherlands. We are a Dutch organisation, and they have a very positive approach to managing all of our investment funds. And as I was saying earlier about the questions you can ask companies that you invest in, Tradeoffs Investment Management will work with organisations, they will petition organisations, they will attend AGMs and challenge companies to make change, and they regularly, on an ongoing basis, review the companies that they have within their various portfolios to see whether or not they continue to meet the stringent requirements that that they have for being inside any of our investment fund portfolios. So again, we offer in the UK a couple of the different funds. The equity fund is the larger companies, Pioneer Fund is some of the smaller up-and-coming companies. Those can be wrapped up in stocks and shares ISAs. There's a microfinance fund opportunity as well, which supports emerging markets and countries that have a developing finance aspect. So, providing finance to those around the world who don't have easy access to that. Also, within Tradeoffs, there's direct investment opportunities. Our corporate finance division will issue share issues and bond issues where they'll work with different projects and companies to put a specific bond issue out there. So that's very much, I'm investing in this renewable energy project, or I'm investing in this community housing project, and it's very much a direct investment into that one specific investment, whereas the others it's the savings go across. So, and on the next slide, as mentioned, he's got it there at the top of his list on our current account, which I was very pleased to see. We've just launched our current account, and that will be, or that's open now for registration. Of interest to open accounts, we'll be starting to open those up in June. So this is a very exciting time for Tradeoffs, and we really believe that this is the first opportunity that consumers have had in the UK to really vote with their feet for their everyday banking values. That yes, they can live a lot of the rest of their life by the values that they have, but a truly ethical, sustainable current account has never really been available to them. So, we're really delighted to have been able to get this to market. So it's a very exciting time for us. So that's a quick summary there of the products that we offer.
That's fantastic. Just before we go on to Lisa at FX, just to remind listeners that if they do have questions, they can type those into the Q&A box at the bottom right-hand corner of the WebEx platform, and then we can take those at the end. So if you do have any questions, please type them in the bottom right-hand corner, and we can take some questions at the end. But I'll now move on. Lisa, if you'd like to present some positive investing platforms that you know about, please.
Thanks very much. Yeah, so I talked a little bit earlier about what positive investing means, and it actually having a much more direct positive impact on the world through the through the benefits that it can create. And I've got a couple of case studies just of different products that we've helped, or social businesses really, that we've helped to raise finance. You know, so there's two aspects to these types of products. One is making available to the general public interesting opportunities where they can really have this positive investment and direct connection with their money. And the other is, obviously, there are a number of social businesses out there who actually would like to have investors who accord with their own vision in terms of their social mission. So the FX investors really do just that. They're not only investing in products that they truly believe in, but actually then for the social business, it means that they're they have a very engaged set of investors who, in some instances, actually can help to steer the direction of the company, essentially. I think I talked before about positive investment going beyond negative screening and saying that actually there are people now who have a much stronger demand. They're much more discerning in terms of the products that they require. You know, people don't just look for the basic certification now when it comes to things like food or clothing or finance. I think there are people who expect a lot more from retail organisations, whether it's banks or shops, and we are starting to respond to that demand. And the Tradeoffs current account is a great example of that. So, you know, I certainly hope that that goes from strength to strength and really proves that the demand in the market is out there. Previously, I think there's some kind of perhaps negative reaction to the idea of positive investing, where essentially if you're investing for good, you're essentially foregoing your financial return. But more and more, I think that that is not necessarily the case anymore. And I think that there are various studies that have been done which can prove that portfolios with high-performing ESG indicators really can outperform traditional portfolios in funds, or in addition, you know, you can search the market yourself now for products, whether they're specific renewable energy products, which are on a par with other commercial investments. So, you know, I think people can be quite excited, and there's enough products out there to have choice as well in the market. So just looking at some of the sectors that we've supported on SX, so through this positive investing, you're obviously having some kind of positive impact that I mentioned. And that's through the money that's raised, but also then the end benefit, whether that's new social housing that's created, hopefully to be held in perpetuity, or it's contributing to the restoration of historical buildings. That's a picture of Clevedon Pier that's on there. And they crowdfunded over £250,000 to help support the renovation of that pier, but also to provide a stable basis for that to become a community asset that works hard to create positive impact for the community. So having an education centre, somewhere where people can meet, and we have got lots of different examples of that on SX, as well as renewable energy, which is particularly interesting from the divestment perspective, but also things like microfinance and also organic food and farming. So lots of different sectors that people can get involved in, because everybody has their own interest points and everybody has different things that makes them feel motivated. So we aim to provide lots of different products that people can choose from. Just a couple of examples. Bristol Energy Cooperative, they raised some money to put solar power on roofs of community buildings throughout Bristol, and as well as some large solar farms as well. I think this is interesting because we talked about people having a lack of connection to their money, and these types of projects can help people reconnect with their money. So it's very close to you, albeit, you know, whether it's geographical, you could invest in a project that's just down the road from you, or actually when you invest, you become a member of the cooperative or the community benefit society. So you actually have a say in how the organisation is governed and run. You can go to the annual general meetings, and you can vote at least once a year. And these organisations are really all about engaging with their investors, which for a number of traditional companies is sort of not really the way that they have existed. This is really turning things on their head, I think, and really you're saying that the people who are invested in this product are part of the community that is being benefited by this society being created, and that's a sort of interesting new dynamic. A couple of other examples are Leeds Community Homes raised over £250,000 for creating affordable housing in Leeds. And then another one, which is the Better Food Company, which also raised finance to help expand their business, already up and running and successful, into a new area. And people really get excited about helping to create those, or helping to make those businesses sustainable and to grow their businesses, so they're taking part in that success and growth. So yeah, we're hugely excited about the divestment movement. We think it creates real opportunities for people to find out more about what their money does, but also, you know, they can take direct personal action as well, and that's what FX really is about supporting.
That's fantastic. Rob, I don't suppose if we came back to you, we could have a look at maybe some other specific funds that Ethical Consumer identified as being particularly positive in our divestment campaign.
Yeah, maybe. So Rachel, are we able to get the slides up again? And if we go to the last one in the list, so while it's appearing, I'll just talk a little bit about it. So so there we go. We've got, one of the questions was how can you invest ethically and generate a financial return? And in the magazine Ethical Consumer, we now run a performance table just against the funds that we've identified as carbon divested in the UK. And some of those you'll be familiar, like Jupiter Ecology, you'll see on the list, quite a well-known brand in this area. And so there are about 10 to 12 of these. When you look at fund management, you realise that it's quite complicated. What constitutes carbon divestment and not? What about investment in a utility? You know, an electricity company that buys, gas or oil energy. What do we count that as carbon investment? So when you're talking about divestment, the detail of what is actually a divested fund and what isn't becomes quite a knotty technical issue. But by and large, the ones that we've listed here, we're kind of pretty happy are carbon divested to the extent to which it's we're satisfied, I guess, at Ethical Consumer. And in terms of the return, you can see their 5-year performance there, or their return rate, which look pretty good. And I mean, I guess part of the reason they look pretty good is that all stocks have been looking pretty good over a 5-year period, despite the fact that the rest of the world is falling apart. Stock markets are doing fine, thanks very much, and the carbon divested ones, are performing at least as well as the non-divested funds in the little amount of analysis that they've had really since such a thing has existed. They've only really been talked about the last couple of years. So over the long term, it's not been possible to track that, but in the short term, it looks like they're performing just as well as the rest of the less ethical sector. So those are just some examples of those that we've looked at in our guide. But it's changing quite fast, and more funds are becoming divested as we speak. So it's a movement that's all heading in one direction, despite Donald Trump.
And Danny, maybe I could just bring you back in for a second. Do you get a sense of, alongside the divestment, any sense or indication of when an organisation's divesting, that money is going into something, not always obviously, but sometimes significantly more positive?
Yeah, I think it really depends on the institution, but I think because so many of these commitments are driven by this real sense of moral urgency to do something, actually a lot of the commitments we are seeing do have built into them, and we will invest this positively. So not all of them, but yeah, that is something that really matters, and particularly chimes with different different communities, and the faith community has always been really strong on positive reinvestment. The students as well are always looking for ways to kind of reinvest in the campus itself. And I think the local government campaign has done a really good job of looking at the opportunities within a constituency and saying, why aren't we investing in this? So yeah, definitely. We've seen a real positive move to get that money into something good.
That's great. I guess on the personal finance side, I guess one thing we should mention is perhaps financial advice. I mean, Rob, I know Ethical Consumer's done a little bit of work on this, but anyone else feel free to join in. What's sort of the best advice around getting ethical financial advice?
I don't know whether that question was directed at me. I mean, in a sense, FX particularly is a project that was kind of set up to allow people to go directly to projects without needing a financial advisor in the same way. So maybe they can speak a little bit to that. So they offer the due diligence that a financial advisor might do to stocks more widely across a wide range of people, and that's kind of how their business works, in as much as I understand it, but I'm sure Lisa will probably kind of refine that to some degree. And, we at Ethical Consumer on our website, we've got a list of independent financial advisors who specialise in ethical financial advice, and I advise you look at that, really.
Okay, that's great. Lisa, would you like to add anything else to that?
Well, just to say that, that the aim of our positive investing platform is really to sort of try and describe in layman's terms the product. So make it easy for people to understand, make it very clear where the money's going, who the beneficiaries are, what's the governance of the organisation, but what are the specific characteristics of the risks and different things like the term of the product, etc., and the fees, making sure that's very transparent depending on what the product is. Because I think most people would say that if they looked around the marketplace, it's actually quite difficult to find products where it's easy for people to get an understanding of all of those elements. And traditionally, I think it's been quite an opaque market because, you know, it's seen that retail investors shouldn't really be doing this themselves. Well, I understand that, you know, everybody has to be very aware of their risks. They have to be, or the risks of the product and their own profile, but, you know, people are increasingly educated in financial products and can make decisions themselves. Having said that, we do work with a number of ethical financial advisors as well, so they might come to us and say, well, I have a client who, out of their entire wealth, wants to have a certain percentage in direct positive investments or savings, and so we'll work with them to identify different products, and then they will make an assessment whether those are appropriate for their clients or not. So, you know, we work both with direct investors but also with IFAs as well, actually.
That's great. That's great. Well, thanks very much for everyone who's joined us, to everyone who's joined us for the last hour. It's been really interesting. So thanks very much. Thanks to Danny, to Rob, to Sharon, and to Lisa. This is the first, indeed, webinar that FX has done. So thanks very much for organising it. Hopefully it will be the first of many. We have your email addresses, so I expect we'll be asking for some feedback over the next few days. So that's it from us. Thanks again to the speakers. Thanks again for everyone who listened. And yeah, we'll see you next time as well, hopefully.
Yep. Cheers, Tim.